Okay, so where we left off is I wanted to go ahead and go back over these two concept checks. And yes, Tuesday's lecture is already posted on D2L. So you can find that in course content. They're under the module Webex lectures. So we left off with the concept checks just as a review of last time. It's just going over again bank reconciliation and budget. So on your homework or on your exam, you may have one or two problems you're going to actually have where you're reviewing the actual bank statement, or you're going to have it in Word form. Again, with bank reconciliation, when it's like this, when it's like a Word problem, make sure you read carefully what each line is saying and double check who hasn't done their job in recording yet. Again, the timing differences. So starting off with A, the December 31st cash balance according to the training records is $1,610, and the bank statement cash balance for that date is $1,900. Usually with those, with any kind of word problem, they're going to always have the balance as the first item. Now, if it's like you comparing a bank statement, like up here, remember, balance is usually the balance will be found on the bank statement, and then they'll give you the cash balance. Alright. So since the first line was just balances, you can fill those out. No problem. That was given to us. Next. Due to December 31st, daily cash receipts of $800, okay, were placed in bank night depository on December 31st, but do not appear on December 31st bank statement. Alright, let's piece this together. Who has not recorded the 800? Is the bank or the book? Who did not record the 800? And good. So, bank did not record the 800. We know cash receipts is cash coming in for the book, meaning our cash should go up. That would also mean on the bank side, cash should go up. We should add. This again is a deposit in transit. Okay. E. Due to comparison of canceled checks with its book show 3 checks outstanding. Okay. So C again is showing the checks outstanding. There's only one side that has outstanding checks, and that is the bank. So these two will always show up: deposits in transit and outstanding checks. And of course, you'll always list out all your checks. Next, we'll go to E. When the December checks are compared with entries in the accounting records. Okay, so you're comparing the two. It is found that check number 6267 has been correctly drawn, pretty much again means taken from the bank, for $340 to pay for office supplies, but was erroneously entered in the accounting records as $430. Alright, so first off, which one did it correctly? Is this an error? Who did it correctly? Is it the bank or the book? So, with an error, we have to find out who did it correctly. First, that's the number that we need to reach. Now again, who did it correctly? Can you guys even hear me? Okay. Alright. Well, look at there. Which one has actually correctly next to them?
The bank.
Good. Alright. So, this would mean that I need to follow this 340. Okay? So, we know the book is the one in trouble. So we're either going to add or deduct the error from the book. Again, we need to find the difference, which, since eyeballing is about $90, you do need to do the math, you can. But with this, we need to figure out we're going to add or subtract from the books. Well, again, this is a check. Remember, checks are always negatively affecting cash. So, it's showing that we withdrew more. So basically, we have overdrawn our cash than what it should be. We need to reduce this number. So, technically, this number is negative to cash. And we need to get to the actual negative 340. So, what causes a number that's negative to become a lesser negative? Do we add or subtract? Good. Only time with errors we gotta really do math past that. So, if we know we gotta add, oh, yeah, first one, we'll see. Oh, well. There's an error. So we add the error in. I want to show you the collection, but that's okay. So there's the collection. Okay. So again, errors take a little bit, but as long as you can piece out what's going on and what's happening in cache and that the original transaction, the error transaction, you can figure out what you need to do to get it to the other number. E was again bank collected on note receivable. So that's key right there. That tells us which account we're working with. To increase Gucci's account for 470. And it already told you that it didn't record, so that helps us out. The bank statement included an NSF check for 150 received from Candace of Prada Inc. in payment of its account. The statement also includes a $20 charge for check printing, and Gucci has not recorded these transactions. So again, if the word problem statement gives you who hasn't recorded, that gives us a lot of extra work. Well, that gives us some extra help there. So since those said that they weren't recorded, what do I highlight? That's right. Since they weren't recorded, we already know the deductions as they are. Now, we already went through all lines, no problems. So all we have to do now is do our classic math and see if the balances come out to make sure we did it correctly. So if I add this side to deposit and then subtract, I come out to adjusted bank balance of $2,000. Same thing here. I'll add, and then I'll subtract, and ooh, we come out to $2,000 on both sides. We are perfect. Next, we gotta do our tabular. So which side do we do the tabular on? Do we do it on the bank, or do we do it for the books? Bank or books? Got to see. Don't want to be left. Good. So it is only on books, so remember that. So first one we're going to hit is collection, 470. So again, we already know our cache. Cache is always going to be done for us since it's already add. Since this is a collection on note, our note receivable should go negative. Watch out on these languages. Again, if it doesn't state it as a note, it's going to fall under accounts receivable as the collection. Okay? Of course, no effect on the net income statement. Next is the error. We know we're adding cash. We check what account the error was to. So it's to pay office supplies. So that means office supplies is our account that's affected by the error. Next is NSF check. We know this is going lower because we're deducting. And since it's an NSF check, it always affects accounts receivable. Okay. Lastly is the check premium charge, which again, since we have it under deduct for cash, going negative, and it's going to pop over here on expenses. And since it's a part of the expense or revenue, that means it affects the income statement. Bank service charges. I guess this has extra blanks. Okay. And that's really it for the bank statement, bank reconciliation. Okay. And then for the budget here, okay, Marketing company management wants to maintain a minimum monthly cash balance of $15,000. Okay, so we're only looking at a $15,000 budget. At the beginning of March, the cash balance is $16,500. Expected cash receipts for March are $210,000, and cash disbursements are expected to be $220,000. Okay, this one's a very simple one of the budget, but they want to know how much cash, if any, must they borrow to maintain a minimum of $15,000. Alright. So first one that we hit is the first beginning cash, which according to this problem was $16,500. Okay. Next, we always add our cash receipts. So that was $210. Okay. And this, of course, means this is our cash available, which is the addition of these two. Finally, we know our cash disbursements, so we always subtract those because, again, that's cash moving out. Remember, these budgets are only on a cash budget, so nothing that's dealing with non-cash transactions or credit. So, this is our excess of cash or available cash over cash disbursements. You still have positive money after all this, but it doesn't equate to the $15,000. So that would mean for financing, which is the last step in financing up here, we're going to have to borrow. So how much should we borrow to get to $15,000? Good. So $8,500. Good. Budgets are not terribly tough. It's really just piecing it together with the information provided. So remember, always add your cash receipts. That's the first thing. And this can be multiple items, just like the example was. Okay. So again, wherever cash came from, that increases our cash balance. And then whatever items that will decrease our cash balance, we would have to subtract. And this is always going to give us an excess or deficiency, if somehow this is negative, of cash. And then we have to check what the company wants as their minimum cash balance. Alright. Any questions over these two? If not, make sure you type in no in the chat. Alright. So, next, we're going to go ahead and hit Chapter 6. And Chapter 6 is one of those really fun chapters. So, let me zoom in. So, Chapter 6 in itself, back to this one, as a good review, is again dealing with basically merchandisers. And how do we account for various items of a merchandise company? So, starting off, again, remember that we're going to deal with this retail and merchandisers, either wholesalers or retailers. These are the accounts for them. Then the wholesalers are going to buy products from the manufacturer and sell them to retailers who then sell them to customers. Okay? The way that they compute net income is just slightly different than a service company, and that's where we end up with cost of goods sold to gross profit. So again, we take our sales, we subtract out our new expense account called cost of goods sold, and this equals gross profit, and then gross profit minus the remaining expenses right now for us will equal out to either the net income or loss for the merchandise company. Again, we're going to go over many things to help you do this. As we only got really so much time right now. The operating cycle, again, operating cycles for merchandisers really just come to a point where it's how quickly can I purchase inventory and basically get our money back with a profit, you know. So, we got our cash, we're going to purchase merchandise, we're going to probably sell them either for cash or credit sales. Most likely, if we're a wholesaler, it'll be on credit. Then, we have our accounts receivable, we build, and eventually from the accounts receivable, customers will pay us money, and we get our cash back. And that's the cycle. Again, operating cycles are going to be different depending on the retailer or wholesaler. And basically, how quickly do they need to turn over or basically complete the cycle? Again, examples were department stores. It could take them 2 to 5 months to complete their cycle. That's mostly because they're dealing with material items. Right now, with what's going on, this cycle is a lot longer. Because, one, they can't sell anything since they're shut down, most of them. But, it's usually 2 to 5. Again, that's selling clothing. Okay? While grocery stores are ranging from 2